All right, let's analyze this chop day. So here's the day in full. Right here. My maroon is a indicator, tells me when lunch was, so I'm not trading lunch. So let's look at this through the trading day and look at a couple of my trades. So this was the opening, 9:30 here. So looks like it's pushing up. So in this case, I am looking for backside longs. So if I'm to draw some backside stuff here, this goes up. I would be interested in this long right here if the market presented it to me. I want 2 candle separation, come back and touch. That never happened. It was all muddy and it went down. And in fact, 9:30, the opening was 04. I'm going to mark the opening because that proved to be important today. I'm not worried about anything else. Overnight highs, overnight lows. Not worried about that right now. We're trying to establish trend and trades. So since I did the opening, let me just hit the 30-minute chart, and then maybe we can just delete it. Let me remove this little volume indicator. So here's the day. Basically, every time frame went through the opening. This is what you called a perfect POC today, point of control. You should probably keep this level on your chart. In fact, I'm going to rename it from open to Wednesday perfect POC, because that will be a target, and I'm going to put that in my cotton lines, although it's a market profile, whatever. So I'm going to remove that now. Let's go back to our 3-minute chart. So mark your opening, put it on your chart, because that will be an area of interest tomorrow. So I would have been interested in this long, I would have been interested in this long, and I would have been interested in that long had price kept going. What does that mean? So let's say from here price continued up. I had 2 candle separation, it came back, I would have went long for this, okay? Same thing here. If price had continued up from here, I would want it to come back down, touch the line, and I'm in. Didn't happen, so no trade. Price starts trending down, taking out these lows here. And so I'm pretty sure at this point, I can go back and check my screenshots, but I am at flat and it's coming back down. Now, let's go to a 1-minute chart. And the reason why is because it was important here. As we were going down, I was like, okay, I don't have any, let's go back to 3-minute for a second. We're going down, these are huge candles. I said, I don't have any levels to possibly trade. So what do you do when you don't have levels to trade? You drop down in time frames. So let's go back into that area. Here's the opening. So I do remember remarking, hey, we got a 1-minute backside right here. And we have another 1-minute backside right here. A 1-minute front side, 1-minute backside. You could have also traded this because you had 2 candle separation. You had 2 candle separation. You could have traded that, but I would trade deeper into the range, be a little greedier. I personally was looking for this greediest 1-minute entry and did not get in. One of our traders, Mike, got in here beautifully. So now let's go back to the 3-minute. So there was no trade here on the 3-minute except for the possible break level. That's the only trade if you stayed on the 3-minute, which is no problem. You didn't get in a trade. No big deal. Your account stayed the same balance. But I went to the 1-minute to see if there was a better entry, and I didn't get it, but Mike did. Next thing is when price shot up off of that, I went, ooh, that's a very highly responsive area. That's a break level. If we come back to it, I'm probably going to take a long. At this point, we're still in balance because price action has not taken out either of these break levels. So we're still balanced. Came back down. I took that long right there. Here's my entries. I didn't record all of them. I did the ones in the morning. So I took this first entry long, and it went up. And then because we're in balance, I'm not afraid to take traditional cotton levels. I had this as a short, and I went short there. So long here, short there. This is a short. It's a front side with 2 candle clearance. No problem. Legit trade, small, inside the range. That's also basically the opening. So I was shorting a cotton level and an opening. And if I remember, will it show me? No, VWAP was way up there. Moving average. Okay, I had the 144 there. So offered several little confluences of why I took that short. Okay, so price goes up. It does take out this swing high, takes out this swing high, and almost takes out the IB high, but it doesn't. So in this area here, at some point, you can say, okay, we're trending up. I'm looking for some backside longs. So do I have any? I do not. I don't have any clearance. So there's no trade. 2 candle clearance kept me out of having a bad trade. Price comes back down. Takes out this break level here. I'm back to balance. And you can take. Now, this is the reason I made this post earlier. If you take the wick of that candle, this candle's already tested. But if you drop down, let's drop down to a 1 minute for a second. Let's drop down to a 1 minute. Do I have any levels that I could trade down here? Oh, here's a 1 minute level. Boy, that's a pretty big candle. What if I go to 30 seconds? All right, let's go look at 30 seconds here. The 30-second one is a little lower. Let's make this, because that's where the 1 minute was. Let's go back to the 3 minute now. Sorry, TradingView doesn't make this the absolute easiest in the world. So down in this candle here, you had greedier 1 minute and 3 minute, 1 minute and 30-second levels that you could have traded for a little something. So be aware that if you don't see a trade there, maybe you drop down in time frames, look for something a little greedier. And today, if you wanted to be in trades, you needed to be in greedier trades. So this level right here, this was already tested. I would not have traded the body of this because once a wick is tested, the whole candle's tested. But if I wanted to go long down in here, I needed to drop time frames. All right. So price took out this. So now I'm thinking that breaks. Now I'm thinking we're going down. I'm now looking for a backside trade, but they just didn't go down far enough to come back. So it didn't happen. We go back up. We take out this break. I'm back to balance. So we're at balance. No problem. So let's get back to where I was. I know lunchtime here. Price went down. Price went down. Price came back up. You could take this backside short, and you would do well. Did I do that trade? Did I? Oh, I didn't mark the afternoon trades. Okay. You could have taken this backside 3 minute cotton. It went down a little bit. You made a little money. And then the craziness of the minutes, and really there's no trades going on in there to even mention, nor over here. Now I did see, did I mention this trade right here? I did not. You know, it's one thing that's a little difficult sometimes in hindsight, which is a good reason to mark where your trades are. So this was a trade right here. obviously because I took it. And I probably took it off the wick. 2 candle clearance, price came back, I went long. So, challenging day. You had to drop time frames to get trades. If you were purely 3 minutes, that's a 3-minute trade. This would have been a 3-minute trade. If you'd went for the greediest, that would have been a 3-minute trade. You couldn't have done the backside because this candle already went up and touched it, but it did bounce. Because the backside bounced, I would take the front side. So you got a little something there. However, that was New York lunch, so that could be challenging. 3-minute trades, no. Boy, just an ugly day. Let me zoom in here. Would this have been a trade? So price went down. You had 2 candle clearance. Price went up. It did touch and bounce. That could have been a trade. Did I take that one? Oh, I did take that one. So yeah, sorry, I unmarked it. That's why I moved the line over to here. So yes, I was like, that looks like a trade. So 3 minutes, that was a trade. That was a trade. It's during lunch, but this is a trade. 2 candle clearance, come back up, touch, and there's your short. You can't use the backside because you didn't have 2 candle clearance. The only candle I had was this one, or you could have went with this one. It's no big deal. You're just taking a little more heat. This is the first candle that had 2 candle clearance. Price went down, 2 candles. Here you could have done it. Here, this is a good little topic. You can't take this trade way over here because it already bounced here, in my opinion. Price went way down and it shot back up. I'm just not interested in that trade. This is where there's cotton levels, and then there's how to analyze the cotton levels. I just want to double check. Price went up, then it came down. Could have taken that long because you had 2 candle clearance and it came back. All right, there's a little more 3-minute levels than I thought there was, but it wasn't the prettiest action. And the reason why is because you had this opening at 04. Let's put 04 back in here. I'm going to make it white. Do you really want to be trading that close to the open? If you do, you trade small. Today was all about small trading. It was about having to drop in some time frames to find nice, clear, clean, crisp levels. And you did have a few trades on the board. And even in all this ugliness, none of them were losses. None of them were losses. I'm just looking here. Nope, that wouldn't have been anything. Actually, here's one more trade. Right here. Let me remove this open. So this is a backside that had 2 candle clearance. This backside did not have 2 candle clearance at all. In fact, I'll draw it just for clarity's sake. There was no 2 candles. You had 1 candle. Can't make that trade, in my opinion. That's a George rule. That is not a cotton rule. Price goes up, touch, bounce. Very nice. So there's your trades for today. A little more than I thought. And those worked out fairly well. Okay.